It is my pleasure now to welcome the founder of Medici Ventures, Jonathan Johnson. As the chairman of Overstock, he was paramount to the company's decision to begin accepting Bitcoin. Jonathan?
Well, it's great to be here. This conference every year gets bigger and bigger. Overstock and Medici were here for the first one, and we hope to be here for each one of them to come. We've got a great panel today that's going to talk about the tension between security and financial inclusion and how blockchain can help balance that tension. So I'd like to introduce our three panelists. First is Amy Davine Kim, who's been out before. She's the Global Policy Director and General Counsel at the Chamber of Digital Commerce. Welcome, Amy. Next is Amit Sharma. Amit's a former Treasury Department official, and he is now the founder and CEO of FinClusive Capital. Welcome, Amit. And lastly is Greg Pesci. Greg has years and years of experience in the payment industry, and he is the president and CEO of Spera, another payment company. So it's really bright, and I can't see hardly anybody out there, but I want to ask a question. How many of you in this room have a credit card or a debit card? I think that's everybody. How many people in this room have multiple bank accounts? That's a lot of people. Now, if we'd asked that question in the Caribbean, only 6 of 10 of you, 60%, would have raised their hands. If we'd asked it in South America, it turns out it's about 30% that raised their hands. And if we ask it in Africa, it's only about 10% that raised their hands. These are people that often have jobs, have addresses, have utility bills that they pay, kind of the things that we do to open a bank account. But much of the world cannot participate in the financial markets because they don't have bank accounts. In fact, in the US, it's about 8% of the population that is unbanked, and there's another some percent that are underbanked. And so we're going to talk about why that is and what blockchain can do to solve it. So let me throw out the first question for the group. First, Amit, can you define what de-risking is and how it affects people who can't get bank accounts and participate in the financial markets?
Sure, and I'll do that. I'll do that in the context of how we looked at conceiving of the anti-money laundering compliance framework out of the Treasury Department in a post-9/11 environment. Obviously, that was largely driven by enforcement and intelligence-driven related motivations to respond to a pretty immense security threat. And in the context of going out, using proactive measures to go after bad guys and the financial networks that support them, it was also creating, growing the universe of anti-money laundering, counterterrorism finance, and compliance-related requirements that would befall bank and non-bank FIs, not only in the US, but even the global standards for compliance. Fast forward, as those measures have continued to grow over time, exacerbated through the 2008 credit crisis, et cetera, to protect the system from abuse, it has also led to huge cost burdens in risk and compliance management systems across bank and non-banks globally. As a result, there are a number of types of clients, constituents, types of transactions, types of entities, and jurisdictions otherwise considered higher compliance risk. And it has had a disproportionate negative impact on the global poor, low moderate income, a lot of the constituencies in the areas that you earlier pointed out that already lack access to basic financial services. So de-risking grew out of this phenomenon that in weighing the benefits associated with regulatory compliance, growing governance risk and compliance costs in major institutions, many of these constituents, types of transactions, et cetera, were pushed out of the system. That's what de-risking is. De-risking is, in fact, jettisoning, denying, or actually pushing out of the formal banking system a number of these types of transactions or constituents considered higher compliance risk.
Amy, anything to add there?
Yeah, I agree with that, and what I'll add to it is, I think that what you're talking about is a result of the 9/11, the USA Patriot Act that came out of that, and then you see a lot of enforcement actions, consistently higher and higher, multi-millions, hundreds of millions, billions of dollars in anti-money laundering and sanctions compliance sanctions on most of the major banks, and then you start to see then it shift down to the mid-sized banks and even some of the smaller banks and casinos. So this whole segment of the financial services industry is exposed and being receiving the consequences of these enforcement actions. And so within that, you start to look at the cost-benefit analysis. Where are we at risk? Where are we? Do we have some exposure to potentially not meeting up to our regulatory compliance obligations? And do we want to keep on that burden? And so de-risking then becomes not just looking at each customer on a case-by-case basis. Is Jonathan a credit risk or a money laundering or a sanctions risk that we want to take on? It's all money transmitters. We've just decided we can't take on any more money transmitters as a category of customer, and that's where I think the problem has generated.
So we have this situation that arose out of terrorist acts and money laundering, where we've decided we need to have a certain amount of security of who we let into the financial system. So bad folks can't get in and abuse the system. The rules have been cranked to a place where there are a lot of people who aren't bad guys. They can't be included. And so we want to talk about how to balance that. Let me ask this question. How effective are the current rules at catching people? Are they over-inclusive or are they under-inclusive? I'll just put that out there. Amit, maybe you could talk about it first.
Sure. If I put my Treasury hat on, my government hat on.
It looks good on you.
Okay. If I put that hat on, there has been an incredible uptick in the level of intelligence and understanding of illicit financial transactions and flows in the formal system. Absolutely and without question. And so the ability, therefore, for law enforcement agencies and others to look at illicit activity, investigate that illicit activity, and then undertake both investigations and prosecutions against ne'er-do-wells in the system has upticked. So in that sense, if you talk to the majority of the law enforcement community, you'll see a positive impact in that regard. That said, the very theme of this panel, right, is on a net basis, are we actually decreasing systemic risk and increasing transparency on a net basis? And in that regard, I would argue no. Is that it's resulted in such a push out of actual, very legitimate transactions, and I would argue, especially, just like you opened, especially with the negative impact on so many whose lives depend on that financial access, get bucketed in the same silo as actual criminals. And so on paper, someone without a credit history that doesn't have a verifiable, authenticatable identification, that's in an emerging market or a frontier market considered a high risk or conflict zone, is automatically looked at by a financial institution as being high compliance risk. And if I'm facing 25% of my operating budget for compliance and risk management and 360 billion aggregate fines for non-compliance, I then, as a financial institution, say, I'm just not going to do any of that business. And all of a sudden, the goals for enforcement and financial sector transparency end up being undermined because we are actually breaking or down the resilience that financial access intermediation requires.
Okay. Greg, tell us about your business and kind of how this fits
Sure.
in.
It's actually pretty important to the business. So I've spent the last 18 years in the payment space and focusing mostly on micro merchants and then moving up a little bit to smaller and medium-sized businesses. And what we've experienced is that fully recognizing how important it is for us to protect our nation from terrorist financing, but what it's done at the smaller end of the market is put tremendous amount of pressure on us to try to be able to find ways to underwrite people who find themselves in this situation and to do it cost effectively. If you're going to have a micro merchant who only transacts $400 in a year, and you have to go out and do the traditional type of KYC and AML on that, which we know we need to do.
Tell us what those acronyms are.
I'm sorry. So know your customer and anti-money laundering. These are important things that we need to do, but in the context of these smaller merchants, you start to wonder, can we make money? Is it even worth the effort? And I know you're not feeling bad for the business, but I think it's more important than that. Is it starts to put pressure on companies to say, do I even want to serve this end of the market? Let me just go up the market where I know I can get this information the way I want, where they don't have thin files at the credit bureau or no file at all, where it's easier for us to obtain all this information. And so certainly we recognize the need for doing this, but I feel like having a regime that is a little more consistent with the risk profile of a small merchant who may have limitations on what she or he can actually charge or accept within a month would be helpful, because it's hard sometimes to be able to do this economically, and therefore sometimes people just move away from that end of the market for the people who probably need it the most.
So give an example of harm. I know you've had times when you personally have engaged independent contractors. Give us an example of if you're outside the system.
Well, we build software for independent contractors, for freelancers, for independents, and as part of the software, they can manage their business, their tasks, and build invoices, and then payments. And when it comes to payments, this is where it becomes challenging for us to obtain the information that we need in a timely fashion. And unfortunately, I should say fortunately, we have a chance to work with independents in this country and around the world. And when you deal with a freelancer who's from outside of this country, there's a feeling sometimes that you almost assuming that this transaction is not safe, it's not good, and we have to do extra things to try to be able to make sure that we can actually transact with them and work with them. We've used some of the largest online platforms. There's great companies who provide access to freelancers, and we actually did that with one who was in France, and we worked with him for a long time. And then the platform informed us that there was indications of fraud on the account, and we weren't able to find out what that fraud was. No one would tell us what that fraud was, but his account was shut down, and we couldn't transact with him at all. And so we had a deliverable for our client. He had software he'd built for us, and he did great work. In the end, we had to go around major workaround to try to actually find this guy and to actually pay him. We used a very large payment processor, international one, that who refused our first 3 transactions. And then on the 4th one, we were able to get it through, and then they shut our account down. And so you find out some of the transactions, especially as this market continues to grow, it's harder and harder to make it work.
And I would say that, what I found, especially I was in private practice, law practice before joining the chamber, that, obtaining and maintaining a bank account, especially in the money services sector, which is one that you see a lot of virtual currency exchangers in, was one of the key challenges to the business. Not necessarily regulatory, although regulatory is up there as well, but obtaining and keeping a bank account, and then you have to have backup bank accounts as well. So those are big challenges that potentially other industries don't necessarily face.
And I'll say any business that's in the crypto business, I think, is particularly at risk of having their bank account closed by being de-risked. We at Medici Ventures have invested in a number of companies in the crypto space. One in particular for years. Our investment was either made in crypto or kept in cash in a safe.
Well, I would say that, what's happening too is that what we dubbed this term pre-risking, where if there's transactions or assets or activities that the institutions, the bank says that's going to be a high compliance risk, you're just simply denied. So this is where you've had this disproportionate impact. I mean, small and medium-sized enterprises in the emerging and frontier markets, simply because of where they're located, can be denied. Charities trying to provide essential humanitarian relief as a result of disaster or other consequences in those areas, incredible payment delays, or just because due diligence has gone way up because of the compliance measures. So this becomes a real impact, negative impact to folks that really need vital financial access.
And the key is, you're supposed to be looking at a case-by-case basis. Assess the risk, and it's a risk-based decision, each customer. But, the regulators, starting in 2005, the prudential regulators like the OCC, the FDIC, the Fed, and FinCEN as well, have recognized, you can't, we don't want you to do that. You need to make reasoned decisions based on each customer, and they've done so again in 2015, also at the international level with the Financial Action Task Force. So the regulators, the banking and financial services regulators see this and recognize this as a problem, but it's still occurring, and I think, so we're still having to deal with this.
So I think we've defined the problem. There's de-risking, there's people that system, frankly, the security doesn't always work and we're letting some in. Now let's talk about the solution, and in particular, how blockchain, we're at the blockchain summit, how blockchain fits into that solution. Amit, what are your thoughts?
Well, I come back to the premise, right? And now I'm taking off my government hat.
That looks even better on you.
Looks better on me. And I'm kind of doing penance. That's what FinClusive is, really, because we've created a lot of harm in the system, de-risking, et cetera. At the basis of all compliance and anti-money laundering and the Bank Secrecy Act is the one question is know your customer. That's the single most important question, right? What's their source of funds? How do they use those funds? Can you verify the beneficial ownership, et cetera, et cetera? Well, that's the very set of questions that you want when you're trying to address contractor working, small, medium enterprises, remittance companies, money service businesses, crypto. And so that's number one. Number two, it's how do I build surveillance in the system to meet the compliance needs to protect the system from exploitation and abuse, and protect the privacy concerns, et cetera, that are inherent in financial intermediation and access because you're turning over sensitive information. This is where blockchain has a tremendous power, where we can benefit from the immutability, the ability to do real-time transaction monitoring, to do much more cost-effective and real-time client authentication that, quite frankly, if you think about it, increases the ability for regulators and law enforcement to actually fundamentally enforce on compliance while providing financial access. There's a misperceived tension between financial inclusion and a strong, protected financial system vis-a-vis compliance and risk management. Only what's happened, because the pendulum always swings, is banks, formal FIs, are doing more compliance management, not necessarily better and more comprehensive risk management. And so if we're simply trying to be compliant, we're not necessarily understanding the risk, and therefore we are continually, like Amy said, balancing those decisions on perceived risk and not actual risk. And that's where the blockchain can actually address actual risk, not simply perceived or bucketed risk.
Greg, what are your thoughts? How are you using blockchain? How can more of the world be involved in the 21st century economy?
So we focus again on independents and freelancers, both here in the United States and around the world. And until I got into this, I didn't know how much it's growing here and internationally. I mean, there are 57 million people in the United States who are participating as a freelancer or an independent in some way. The majority of them are still part-time, and then there are those who are full-time. But in some way, they're doing some side hustle. They're doing something, some gig on the side, or something that they want to actually express how they want to work or to make additional money for their family. And they're doing about, last year was at $1.4 trillion. So it's not really chump change to our economy. It's important. And globally, there are even more, 100 million in Europe. And so what we look at it and say, what can we do to make it easier for them to be able to take payment, right? You want to do two things when you're doing this. You want to get your first gig, and then hopefully do well enough that you get a second one. So getting more work and actually get paid for it, because minor details, that's kind of important. And so what we're looking at is what could help in that process. And I think the blockchain can do at least three things, if not more. And those three things are, one, and Amit, you can speak to this much better than I can, but I think it can be very helpful in the identification process. It can assist both sides of the transaction. It could make it easier for the person, that person who may be doing their little startup, to be able to provide the information that's trusted information in a way that they could actually get accepted for some sort of financial account. And it can make it easier for companies like ours who serve them to meet our obligations to know who they are, to meet our know your customer. obligations. The second one I would say is that I think, and there are, again, people here can speak about this much better than I can, but about contracting and the ability to use the blockchain for being able to facilitate those transactions. And then the third one, which is huge, and that is payment and particularly settlement. Being able to make that faster. All of us want to get our money right away, but when you're a freelancer, that income variability is pretty serious, and speeding up your ability to get your funds means a lot. And blockchain holds out the promise for all three of those.
Good. Amy, anything to add on that? How the blockchain can be part of the solution here?
Well, I agree with those things. I mean, it definitely the efficiencies, the elimination of intermediaries, which then eliminates costs. So you have speed, reduced fees. You get more of the money that is being sent to you. So all of those things, I think, are recognized benefits of blockchain, especially with respect to cross-border payments. So I feel like solutions, right? I mean, so you're looking at what the problems are. I mean, I think at least within this context, there's two: the correspondent banking relationships. So when you're dealing with cross-border payments, you have to have a correspondent bank. There's a number of banks that get involved in that process as it goes through the chain, and right now we still need those. Eventually, I think blockchain will eliminate the need for that. But at the moment, we still need those, and the correspondent banking is an area where we're seeing de-risking happen significantly. I think there's a World Bank study that shows that 6% of active correspondent banking relationships have decreased. It's been a 6% decrease over the last 5 years, and we're seeing that play out. So it's correspondent banking, and then also with respect to just how the financial services industry and regulators perceive money transmitters and money services businesses. And that's a real challenge. And the Chamber had a paper come out last year where we recommended collaborative action. So you really need industry advocates, we're working on this, and regulators and policymakers to come together and really study this solution. I mean, this is complicated. There's a lot of pieces here, and we're talking about these, we only have so much time. It's complicated. You're talking about national security and the financial stability of the markets, as well as, including the 2 billion unbanked and the 1.5 additional underbanked. Those are huge numbers, and it's a global problem. And so, you see, you might have seen the GAO came out with a report last week that they assessed the problem of de-risking along the southwest border. And they recommended, and they found that the prudential regulators like the OCC, the FDIC, Fed, FinCEN have not done enough to research amongst banks and financial institutions the full spectrum of why they're making the decisions they're making, whether it's AML or other risks, like you were saying, and really understand that better so that then you can address it. So there's a lot of pieces at play, the benefits that blockchain can play technologically in this space, as well as how we're perceiving it from a regulatory and enforcement perspective.
A couple things I'd like to add. When I think about how I use a bank account and why it's primarily for reasons. One, it's to store my money. When Medici, they wire my money to my bank account, so I'm not taking home an envelope of not to get robbed in a shoebox in my sock. I store my money at a bank. The other reason that I use a bank primarily is for access to digital money. Now, for those of us with bank accounts, that means a credit card, a debit card, hooking up to Apple Pay or Venmo or something like that. So that when I go with my wife on our weekly date on Saturday to Costco to buy a bunch of grocery shopping for our big brood, that I don't have to carry a gangster wad of cash. I can use my credit card. If you don't have a bank, that's a big problem. You don't have a place to store your money, and you can't participate in the global economy with digital money. Digital wallets, which I think are largely being born out of blockchain, solve both those problems. If you can be paid in crypto or a fiat digital currency, you can store that on a digital wallet without a bank account, and you can use it as digital cash to people. So I think that's one place where blockchain plays a big role. A second place has to do with money transmission. whenever I come to Washington, D.C., and I catch a cab to go up to the Hill, I always ask the cab driver where he's from. And I did this morning when I was going up the Hill. And any guess where he was from? Ethiopia, right, Jim? He's from Ethiopia. And it's like 90% of the people I ask. And I say, how frequently do you go back? And sometimes it's, I haven't been back. Maybe it's every 5 years. It's not very often. And I say, do you have family still there? The answer is almost universally yes. I say, do you send money back to them? The answer there is universally yes. And I say, how often? And it's frequently. And I say, how do you do it? And no one says, oh, I just use a wire transfer from my bank. They always say Western Union. They always use Western Union. The fees at Western Union to send $100 back to Ethiopia are going to be 15 bucks on this side and probably 15 bucks on the other side. That's an expensive transaction. Digital wallets, again, blockchain, cryptocurrency, help us solve that problem of money transmission. So I think there's a lot of ways that blockchain can increase security while increasing inclusion. And that's what we want. So let me ask this. I mean, how do we drive inclusion and enhance the regulatory environment? Safety and inclusion.
Safety and inclusion. Well, one, it's demystifying and delinking this sort of misperceived tension, right? Is that inclusion is part of the national security priority toolkit. And we have to understand that exclusion actually increases the risks vis-a-vis national security, not decreases the risk. And blockchain, through the applications that it affords in the capital markets broadly, in banking, in access, and in understanding the flow of both information securely, and what I mean by that is identity, right? Sensitive, personal identifying information that you need, that any financial intermediary needs to not only understand but authenticate real time. And number two, the blockchain affords an ability to monitor transactions through the payment system in ways that were not afforded in real time or are not afforded in real time. 99% of that is done on a look-back basis or is required through compliance departments and banks to say what surfaces through our filters and risk scoring in a way that then triggers a secondary investigation, an alert, and a potential suspicious transaction file, right? But if we can see these types of transactions in near real time, we can actually not only address, like I said before, the actual risks, but we can be much more targeted insofar as investigations that law enforcement and others care about, you know, whether it's human trafficking or drug money laundering or terrorist activity, et cetera. In addition to providing that access. And when that access becomes, brings down the barriers including lack of verifiable ID, lack of a credit history, lack of formal access to banking, which, by the way, is not simply a developing country frontier market reality. It's a reality for millennials, right, in the United States that have just not gotten into formal banking.
Well, I don't know about your town, but in Salt Lake, it seems like there's a short-term loan store just about the corner. That's the unbanked, the underbanked. So it fits here too.
It fits here too, and what happens is when you look at those regulations, only critically need access to banking, the alternative sector. If you're relegated only there, you end up paying more, right? End up having to over. And if you're talking about a contract worker, for example, pay his bill by Friday, gets his paycheck on Friday, but that thing won't settle in his bank till Tuesday, his electricity gets shut off. And if then he's given an overdraft charge of another, X percent, that's less money in his account. And that is exacerbated, right? I mean, $32 billion in overdraft fees alone last year in U.S. banks. That's incredible. And so when we think about the antiquated nature of some of these traditional systems, blockchain afford that surveillance and security and access that provide much more cost-efficient compliance and risk management solutions, but do so in a way that actually drive inclusion. And remember, the number one factor in driving national security resilience is economic resilience. And if and for the enforcement, law enforcement, intel community, et cetera, The idea is to actually be able to see more. And you can see more with the blockchain. And then when you can see more, you actually, with the global standard, you can actually enhance risk and compliance, not simply say, give me some regulatory relief. You can actually enhance it, be much more targeted, and then we can do all the things that really we care about. At $440 billion per year, that's 4 times foreign aid. That's global remittance flows that are drying up, right? To places that under 1% of small and medium enterprises have access to working capital. So this is a correspondent bank problem, a remittance problem, and the blockchain has a lot of promise in that.
So Amit said something, I want to put a finer point. He said we can actually see with the blockchain and cryptocurrency. How many of you have been ruining a party with crypto discussion or ruining your holiday dinner with crypto discussion? Yes. Oh, Bitcoin and just used on the dark web by crooks. I mean, I've heard so many times. Let me tell you an experience I had back in the spring. I had just begun accepting Bitcoin, and I was asked to go testify to the New York Financial Services Commission. They wanted to know what it was like being a retailer accepting Bitcoin. That was something in the afternoon in Manhattan. In the morning, I had reason to have business with the FBI in New York, and so I finished my business with the FBI agent, and I said to him, hey, by the way, tell me, what do you think about Bitcoin? And he said, as a law enforcement officer, I love it. And I said, well, tell me why. That's not what I read in the paper. He said, because I can see where the transactions are. I have a better insight into what's going on. He said, we love Bitcoin. It helps us catch crooks. That afternoon, I go to the Financial Services Commission. The 2 people testifying on the panel in front of me were the Assistant U.S. Attorney for the Southern District of New York and the Attorney General for the State of New York, and they said, Bitcoin is evil, it's anonymous, it's only used by crooks, we can't catch them. So I had one guy from the U.S. Attorney's Office, the DOJ, saying, don't know where it is, can't find it. Another guy from the DOJ and the FBI saying, love it, can follow it, can catch criminals. How do I know which one to believe? I got asked the same question this morning at a congressional hearing at the Energy and Commerce Committee, saying, what about all this crooks who use it anonymously? And I said, well, let me point to you. Just last week, the U.S. Marshal had an auction for 2,000 Bitcoin. They were auctioning off 2,000 Bitcoin. I can promise you the U.S. Marshal didn't get that Bitcoin from buying it on the open market or from mining it. They got it from seizing it. I choose to believe the FBI agent who told me something in the quiet of his office, not the assistant U.S. attorney who's mugging for the cameras. I think it gives us much better insight into it.
So I think that there are other examples in the financial space that we can look to. You know, there are risks in any type of financial transaction, and I'm not here to say that Bitcoin is not something that the regulators need to look at or that we think is just absolutely fine, because we're gonna have to work through this together. But I remember about 15 years ago, we were trying to provide merchant accounts for people in the direct selling space for a large cosmetic company, and we were going to help.
Driving Cadillacs?
I never got one, but yes. and there's a tremendous amount of business that was going through that, and what the idea was that we could do this online, right? That you could use a virtual terminal, and that you didn't have to take check and cash, and you could do it online. And we were originally greeted by the card associations with a lot of skepticism. They thought this is a place that turns over, and not this company, it's an unbelievable company, but it's an industry that has a tremendous amount of turnover. The opportunity for fraud is unbelievable. People don't want to have these products. I mean, we heard it all. And they're too small, and you guys can't do it economically, and it's going to fall. It's all not going to work. And so and there was some truth to some of the things they said, but in the end, we figured out a way to make it happen. How many of you in this room have ever used Square? How many have ever used Venmo? They said the same thing about those when they came out. Square was only be used by the most terrible things you can do on this earth, is what people would say, which wasn't entirely true either. As a matter of fact, Defense Square, which I think is a great company, that's what people were saying. And early on with Venmo, it's like, oh, you can't trust this. I'm just going to send money wherever I want to send it. And people were always concerned about it. There are risks. There's no question about that. But I feel the same way about blockchain when I listen to it. It's like it's the same old story that we constantly hear about how when there's a new technology, some bad people are going to take advantage of it. Yes, that's always been true. So we're going to have to watch for that, and we have to protect for that. But at the same time, good people who want to do good things and want to do good work find a way to make it work. And most regulators understand that, and we're trying to collaborate with them is important for us. But we've heard this song before.
So before we open it up to questions from the audience, Amy, I'm going to give you the last word. Anything else you want to add, say to what we've been talking about, how we can increase inclusion while using the blockchain?
Yeah, this is a tough nut to crack. I think it's a lot of just education. Like you said, the internet, that was said with the internet. Should we use email? Should companies be using email? What's the risk there? And now, you can see how that story played out. So we're at the same beginning, the same building blocks as before. And, really just getting people comfortable with it. The chamber, I'm sure you're all aware of companies that actively use the blockchain as a technology to do just that. They help governments, they help law enforcement, and they help businesses find trends in their data, track suspicious activity and identify it and root it out. So getting those positive messages out rather than just like you started out with, the drug dealers, the Silk Roads, these terrible stories, which yes, we recognize they're there, and that's why we've got these businesses engaged in trying to fight that for the benefits of the industry and law enforcement and regulatory concerns.
Okay, we'll open it up for questions. It's really hard to see out there. Does anyone have questions? Yes, there right there.
I think
Stand up
there's
and
microphones.
tell us your name.
Sure. I don't need a mic. So my name's David.
David, nice to meet you.
Nice to meet you as well. I'm a student up in Boston at the Pleasure School.
Welcome to DC.
Thank you very much. So my question is actually specifically to you. We've been talking a lot about this, like the cooperation. The cooperation that needs to happen in order to make this blockchain stuff a reality, right? I know that, for example, Medici has invested in a company called Bit in the Caribbean.
We have.
Right? How is it that how is it that we here in DC or in the United States can connect to companies like that in the global South, be it in Africa, be it in Latin America, be it in the Caribbean, in order to bridge this gap of financial inclusion? Sorry.
Finish the end.
Oh, sure, no
How
worries.
can we connect to?
So we're here in DC, right? But we're trying to connect to these companies like Bit.
Yep.
Within the Caribbean, Latin America, Africa, in order to bridge this gap of financial inclusion. Can you talk a little bit about what you guys recommend? And someone like me, a student, right? That can what would you recommend to someone like me to get into the sector more?
So
and
let
create
me,
more change.
hard question to answer specifically, but let me talk about one company that we're involved in down in South America, Ripio. Ripio is people in Argentina and other countries in South America for their fiat dollar currency, Bitcoin in particular, put it on the block. It's pretty amazing because our 30-something-year-old CEO of that company, three times in his lifetime, the Argentinian peso has gone to zero. When you live in a society where there's hyperinflation like that, when you get paid, what's the best thing to do? Buy bread. Yeah, spend it, because everything's going to be more expensive tomorrow. He's creating a solution by allowing them to put their Argentinian pesos into a cryptocurrency, which he thinks will be a better store of value. They are also allowing micro-lending through cryptocurrency. I think reaching out to them and seeing if you can be part of the lending program might be something to do. Bit has a wallet down in the Caribbean, which is being used. It's not yet available internationally. So some of these things they've got to start in their own sandbox and grow, David, and it will take some time. I've been told to have people who have questions come down to the two mics. We got someone right here.
Yes.
Tell us your name.
My name is Sinclair Skinner. I'm co-founder of BitMari. We're a Bitcoin remittance program
Great.
from Zimbabwe. And two questions, Gabriel at Bit is amazing. So
Yes, he
that
is.
investment, amazing guys. I think we have two issues. Even though we talk about the South or developing countries, these countries are being dictated to by the West. Their rules, their compliance is really governed by what Europe is saying, what the U.S. is saying, which ends up making it more difficult to do business. So as a company, a U.S. company in Zimbabwe, we want to be competitive with the Chinese and other folks. When our, financial policies are very difficult. It's even difficult just to have a bank account as a Bitcoin startup. Just straight away, if you could speak about how do we, if we're really serious about unleashing, the intellectual prowess in America to help places like Zimbabwe, how do we at least allow those companies that are doing legitimate business? I mean, we're represented by Perkins Coie. We have real, all our finance, we're incorporated in Delaware, but it's still, that's a real, everybody has 3 or 4 bank accounts because they're afraid something might happen. And then two, trying to get a better understanding of how we can, as Americans are here, address issues of replacing the corresponding bank as a means to move money, or what. I think we as Americans have more power to influence the world of these developing countries, and we just are so apolitical when it comes to foreign policy, and we're so removed from these
Let us
issues.
jump on these questions. Can I?
I apologize.
No, it's good. Two great questions. Amit, can I
Sure.
pass the baton to you?
No, absolutely. Well, you point out some risks that so many in your particular situation, but also traditional institutions, non-bank FIs like money service businesses, and even small and medium enterprises that have no verifiable identity or background, et cetera, that, again, just surface up and become categorized as high compliance risk. One of the things we're trying to do at FinClusive is create a blockchain-enabled gateway that allow for international institutions, be they correspondent banks, money service businesses, and others, to come through an enhanced risk and compliance management system, again, enhanced by the blockchain and tied to, therefore, U.S. registered accounts, and to solve exactly this problem. Part of this is, you're absolutely right. The United States in particular, the West broadly, I mean, look, the power of the U.S. dollar is what, so if you want to transact in U.S. dollars, you have to touch a U.S. correspondent bank somewhere. And unless you therefore go through those hurdles to enter that system, you won't be able to do that. And so we're trying to bring down those hurdles by enhancing risk management and compliance using tools like the blockchain and advanced analytics, so that the underlying correspondent banks on our back end, hundreds of institutions in the United States, can then rely on, engage, and trust the compliance and risk management process to engage entities much like yours and others that lack that access. So keep at it. Part of it is to continue to demonstrate that you're committed to the risk and compliance regimes at the global standard level. And by doing that, I think we get more and more and more institutions that, whether it's to policymakers on the Hill, whether it's to regulators, or whether it's, like Amy was talking about, the Financial Action Task Force, a global forum that looks at anti-money laundering compliance. It's saying, guys, folks aren't trying to work around it. Folks are actually trying to adhere to and enhance the standards for compliance so that we can all share in that inclusion mandate, because not only does commerce go up, but the very risks that Jonathan pointed out earlier, even in foreign exchange and these emerging and frontier markets, are not hamstrung or handcuffed by those very problems.
Sinclair, one other thing I would say, and I agree with everything Amit said, is the organization that's putting on this event, the Chamber of Digital Commerce, is carrying a lot of that water. Amy, as their general counsel and director of policy research, was up on the Hill with her yesterday, trying to work on issues like this. Be involved in this organization because it is powerful and it's broad. Amy, do you want to say anything else to Sinclair's questions?
I mean, I would just, what I heard in this question and the prior question from Dave was that you're really reflecting what's going on in the U.S. right now, which is this a very murky, shifting regulatory landscape. And what's unique in the United States is we have 50 states that also regulate money transmission at the state level, requiring licenses, requiring examinations, and so forth if you want to interact or transact with the consumers in those states. So not only do you have 50 states plus a handful of territories to think about, then you have the federal side too with FinCEN, who administers the anti-money laundering program in the US. And then, of course, if you're cross-border internationally, so whatever's going in Zimbabwe or other countries. So it's a very expensive proposition. Oftentimes it requires an excellent law firm like you have. And so we're trying to work on that to try to make that a much more straightforward playing field for companies like yours to deal with, at least here in the US.
How about banks? The bank thing's a big problem to everybody in the Bitcoin startup space. How do we get help? And the DC Chamber is amazing, so we definitely support them. But the banking, how do we get bank accounts security, a better consistency that I'm not worried about it closing tomorrow just because I got Bit or Coin in my name?
I mean, you're
It's hard.
Yeah.
That's a problem right now. That's one of the things that we're working on,
Yeah.
frankly, what Amit is working on at FinClusive. If there was a solid answer today, Sinclair, it wouldn't be a problem. There's not a solid answer today. I think that's one of the things we're working on.
Come see us after the panel.
Right here.
Yeah.
Srini Bangarbale, Commodity Futures Trading Commission.
Tell me your name again.
Srini
Nice to
Bangarbale.
meet you, Srini.
Nice to meet you too. So I'm asking this question in a personal capacity, otherwise my general counsel will kill me. So we talked about inclusion of the underserved. And one of the things it seems to me is that establishing a digital identity for them is a core principle. But we have over 7 billion people on this planet. Two questions, and I have been fortunate to have been associated with the task force, and I served on the task force that set up the legal entity identifier for businesses, and that we have only close to gotten to like 1 million, and that has taken us 7 or 8 years. And I can imagine what it takes 7 billion people on the planet. Any comments on the role that governments and standards are to play in establishing digital identities for individuals?
So I'll start. I don't know if you. So I mean, I think digital identity is one of the most amazing use cases you can conceive with respect to blockchain technology. When you're talking about identity, though, there's so many things that make up who you are that rely on different agencies within the government, whether it's state governments with your driver's license or your birth certificate, or the federal government if you have TSA special clearances, or your passports or visas, work visas, to your library card, to your Georgetown student card. I mean, a lot of things make up who you are and give you special permissions. So that's a complex place to get your arms around and to get people engaged. So in my view, the strategy there would be to start small. To start piece by piece and build those blocks. You're seeing some states look at that. Illinois is looking at this. They published a report not too long ago on the blockchain about what they're doing, and digital identity was one of those. So there are people looking at this issue, and we are too, as a way to try to encourage authorizations for some of these agencies to get involved.
Yeah, I'll just say 2 quick points. One is in the provisioning of ID. That's the challenge. That's the real critical challenge, right? And especially in markets or jurisdictions in which the provisioning by a central authority is either underdeveloped or not developed at all, right? In places like the United States where that is less an issue, the bigger issue is how do I authenticate ID? Right? Verify and validate ID. And so this is where a combination of factors, just like Amy had talked about, we can use biometrics, we can use other identifiers that are linked to me that can then be permissioned to agents in the system. In this case, we're talking about finance and banking, that can then be leveraged to verify that ID so as to provide financial intermediation in a compliant, safe, and secure way. And I think it's in that sense that we got to focus our attention from a digital identity perspective. How do we use the blockchain to verify and validate and authenticate someone's identity?
I think it's a delicate balance. If you're a government regulator, you want to be very, very, very involved in this. If you're a blockchain purist, cypherpunk, anarchist, you want the government not involved at all in this. It's probably somewhere in the middle. And again, I think this is an area where the Chamber of Digital Commerce is going to help put these standards together that's not too far to this side. I would prefer it closer to this side, but they'll probably find the right place in the middle. One more question, we've been told. We're running out of, one more short question.
Hi, my name is Alejandra.
Nice to
and,
meet you.
Nice to meet you guys too, and thank you guys for doing this. My question is more about accessibility. You guys have touched upon how the financial system that we have right now is inaccessible to some people in emerging markets and some smaller businesses. So I guess the question is, how do you propose to make blockchain technology more accessible, or how do you think we can make blockchain technology more accessible to these people? Right now, we have people in emerging markets that aren't part of the internet era just yet, and blockchain is a very complicated subject that is still limited to a very small group of users. So how do you bring these people into the fold of blockchain technology? How do you introduce this? How do I explain this to my parents?
Greg, I want you to talk about what you're doing, but let me tell you this. We talk about emerging markets where people don't have access to the internet. Bit is in Barbados. David mentioned that company we've invested in. 40% of the population there is unbanked. Cell phone penetration there is 140%.
That's right.
There are people without a bank account who may be holstering 2 cell phones.
That's right.
I don't think access to internet is the issue. I think it's familiarity with the process. Tell us what you're doing at Spera and what your thoughts on that are.
And my thought on that is that think of 3 E's that could possibly be helpful in this process, and that one is there's got to be additional education for people to understand how it actually works. I think there's no substitute for actually experiencing using it. I remember the first time I went to Overstock and I bought something on that because I want to show that I could really do it. I bought cologne for my son, which turned out to be worth $1,200, and the dumbest purchase I've ever made. But,
No.
But it was
good
no, it wasn't.
investment.
It wasn't
for-
because I know what you say. If I purchase more, I purchase cheaper or something like that.
The more you buy, the more you save.
There you go.
That's our
Overstock. I'm gonna do a commercial for him. The more you buy, the more you save. and I think the final one is entrepreneurs. I think we have to rely on entrepreneurs who are willing to come out and take the risk to try to make this happen. I know that's kind of short, but that's what I would say.
Can I just very quickly, I have a problem just explaining the internet to my folks, right? So I don't worry about explaining the blockchain. I worry about explaining access. And again, we're talking about 88% plus penetration rate of the phone. And our ability to therefore leverage blockchain simply to bring into the hands and the homes of literally 80-90% of the planet banking services, where the blockchain underlying it can do all the things that we've talked about here. That's really where the education is. And we did surveys on this too, where folks say, okay, will you use internet for banking? 4 or 5%. Do you use it for social media? 85, 90%, and yet it's really just application more than anything.
I never come to a meeting without an ask. This is a big meeting, but I have an ask. You are blockchain evangelists, or you're blockchain evangelists in the making. The next time you hear somebody say that cryptocurrency is only used for crooks and is only bad, respond this way. First, that's wrong. Second, blockchain will increase security while increasing inclusion in the financial market. Today we increase security while increasing exclusion. Blockchain is the answer. Thanks for being here today.